Focus brought to you by IG. Taking a look at the chances that euro and dollar can hit parity once again. Can lightning strike twice in the span of just a year or so here? Because we saw parity between euro and dollar in 2022, and then saw a big rally in the euro, pound, and a number of major currency markets against USD to start 2023. Got everybody thinking that parity is behind euro dollar. No way we're getting back there. And lo and behold, this market has traded under 105 recently. It's gone from highs above 112, under 105, almost 800 pips off from its high in July. And now, it's moved almost 800 pips in the last couple of months, only about 500 pips away from that parity level that historically has been so rare. We did hit for a handful of weeks at the end of 2022 before reverting back to around 105 where we are now by the end of 2022. And then, like I say, railing all the way up to 112. With the recent fall, it has me wondering, and probably a lot of people out there, how much is parity in play? Obviously, it feels like it's in play. Like I say, markets moved almost 800 pips in the last month or two, and now it's less than that amount away from that parity level, telling you that it could get there, historically speaking, looking at the volatility of this market, could get there in the coming months. And since we've seen it so recently, you know that it's not an impossible feat, because you look historically, if you started trading in any time since 2003, you would not have witnessed this parity price level seen between euro and USD until the later part of 2022. It is, though, recently not so rare, historically very, very rare. We did see it in the late 90s until about 2002, 2003. But even before that, similar to what we saw in the mid-aughts until 2022, a lot of trading between 110 and 140 or $1.50 in those 90s prior to that fall around the dot-com bubble. And so parity is historically rare, especially the last 20 years, has not traded under parity since 2002 until 2022. But within a couple stones throw of this level once again. And I thought it'd be interesting to take a look at the futures options market for euro and see what futures options traders are thinking is reasonable for this market by not December, but January 5th, 2024. So essentially the end of 2023 here, the start of 2024, and the delta on the $1 puts in those euro futures options markets is around 10. So they're seeing about a 10% chance of the market closing below $1 at around the end of this year, start of 2024. 10% chance isn't, of course, that close to 50-50. And of course, the theoretical odds at 50-50 would be the put and call strike of where the market is currently trading. And we're not at parity, very obviously, but 10% is pretty significant. It's not nothing. Usually when you look at these historical price extremes, there might be a 1 delta or a 2 delta. So saying, oh, you're going to need, a 2 or 3 standard deviation move to get down there, closer to a 1 standard deviation move, which means, it wouldn't be abnormal. It would be a big move for sure, but it wouldn't necessarily be shocking by futures options traders standards. And so what would be the case for getting there? Well, obviously going to look at what has been the case for getting to where we've gotten, which is US rates climbing to historical extremes. The 10-year now trading comfortably above 4.5% for the first time since 2007. And while you might say, well, Frank, yeah, that makes sense for the US and the USD part of this pair. But what have been going on in the euro area? Well, German rates, which are usually the benchmark or have been the last several years for euro area interest rates, they've increased over the course of the last couple of years, but they're still under 3%. And so a pretty wide gap between the US and euro area. And that gap has widened in recent trade. And so, yes, theoretically, it wouldn't just be US rates moving higher. If German rates move higher than US rates, you might see that euro actually bounce back. But that's not what we've been seeing recently. Recently, we've been seeing these US rates move higher, and globally interest rates either staying around unchanged, moving slightly higher, or even moving slightly lower. And so if US rates can take another leg higher to maybe 5% or beyond, maybe we get close to that parity level once again. And yeah, I would be remiss if I didn't bring up the fact that the first time we saw highs in the 10-year above 4% for the last several years did coincide. You see, that was the later part of 2022 and the first run that this euro dollar market had at parity. And so the 4% not bringing us necessarily back to parity right now, but maybe that 5% would be the new 4% here. 71% of traders thinking that we're not going to get to that parity level, or positioned at least on the long side of this euro. 7 out of 10 IG clients with euro dollar positions are long euro, short dollar. Does that mean that this market has to move up? No, but people are majority positioned on the contrarian side of this, thinking that this euro market will bounce back before that parity level. So a lot of things to think about, obviously, between the options delta being only 10, showing a 10% chance currently of closing below that level by the end of the year, and 70% of traders on the long side of this market. Traders not currently thinking that that parity level is going to get hit, but there's plenty of leeway to make it a possibility. That's for sure.